We are in the gold quarter of this year, where India loves to debate on the fact whether gold is an investment or not. So we'll cover that topic. We'll also talk about gold investment options in India, specifically sovereign gold bonds. We'll talk about certain best practices when it comes to investing in gold. We'll also cover certain frequently asked questions. In the end, we'll talk about whether gold is still a safe investment option, having run up a lot since pandemic time. Welcome to Friends of Wealth. Let's get started. Why quarter 3 is the gold quarter every year? There are three prime reasons for this. The first one being the auspicious festivals of Dhanteras and Diwali, where traditionally we have always bought gold, lies in this period. Hence, most religious purpose buying happens in this quarter. The second being most marriages happen in the third quarter because of Shubh Muhurat being in this quarter. Hence, the demand for gold for marriage reasons is highest in Q3. Finally, everyone who got married over the time in this quarter has their anniversaries in this quarter, and hence the demand for gold for gifting is also pretty high. Most of us learn our first lessons of investment from our parents and grandparents. When it comes to gold investment, most of us would have started from gold jewelry and maybe a bit of coins and gold bars if we have a lot of money. Then we could have bought that in the past. However, today having physical gold in your possession is becoming unsafe with respect to theft and burglary and all. So a new way of investing is available, which is called digital gold. That's nearly equivalent to investing in gold. However, the purity is guaranteed. The money is held with a bank in an electronic format, and the bank set aside gold to back your investment. You possess the investment in electronic format in your bank account or in your demat account. It's pretty safe. The cost and the charges like GST remain same. Another format, sovereign gold bond, we'll discuss in detail slightly later. ETF and mutual fund have been around as well to invest into gold. Both of them say they are better than the other. They are roughly the same. ETFs typically are traded regularly on the exchange, and you can trade in them, like you can sell them and buy them several times in a day also. Mutual funds work via the process of NAV, which is marked against the average price of gold for that day. But they are similar. Sovereign gold bonds are issued by RBI on behalf of Government of India. They have multiple benefits. The first one is the price is pegged with gold, which is expected to usually go up in time over years. So they are issued for 8 years. You get 2.5% interest per annum payable twice in a year, 1.25 and 1.25. The interest is taxable at your tax rates. You can invest max of 4 kg as an individual or 20 kg as a trust in SGBs. So multiple people in the family can invest multiple times. The government does not, to my knowledge, buy gold or set it aside against SGB, which means if you are consuming gold via SGB, then the net gold imports for the country go down, which is helpful in some ways. When it comes to getting started with investing in gold, one of the best practices is to start with SGBs, because SGB allow you to start with just 1 gram of gold, which is 1 unit. So you could just buy 1 unit with 5,500 to 6,000 rupees and it ends in your demat. So that is one of the easiest ways to start. What I typically do is, again, I am new to gold investing. Earlier, I didn't used to invest too much into gold. So what I do is, whenever I make some sort of profit in a trading or something, or maybe get some lump sum money from somewhere, I buy 1 or 2 units of gold via SGB and put them in my demat. The idea is, over the years, coming years, I'll end up with some higher quantities of gold via just 1 and 2 or 3 units bought at a time. If you have to buy gold in larger quantities, I recommend buying it from larger brands, and that's based upon a personal experience. So these brands offer standard rates. The compositions are documented very well. You can verify them if you want to. They have pan-India presence, which means you could walk into any showroom to buy or sell. Computerized records ensure that your composition, your purchase as per the date, everything is available in the records, which you can track back at any point of time using a mobile OTP. And they offer assured buyback. They have the records, they know how much gold, how much percentage, how much diamonds, etc. is there in your jewelry. So they will buy it back at market rates minus certain deductions whenever you want to exit your investment. I'm going to Dubai. How much gold in jewelry or coins can I buy and get to India duty free? That's the top question when it comes to FAQs. The answer is zero. If you have not stayed abroad for more than 1 year, your allowance is zero. More than 1 year, you are allowed 20 grams or 2 tolas if you are a male and 40 grams if you are a female. Beyond that, you have to pay taxes, whether your tenure is low or the amount is higher. The duty on gold, customs duty varies from 300 to 750 grams per tola. So that is based upon what format you are investing in. There's some cess as well. It is mandatory to declare gold when you are bringing it in India. If you are not doing it, it is illegal. So you can't get duty-free gold into India on a tourist visa. Don't wait for corrections. Gold corrections are very hard to predict. Gold prices can be correlated to recessions, to market conditions, boom time, burst time. All of those are fine, but it is difficult to predict how much gold will fall or will go up. It has gone up 300 times in about last 50 years, and no one can predict the price movement. So don't wait for corrections. If you just see the pandemic time, the gold prices nearly doubled in a space of 1.5 years. If we had put a stop loss or booked profit, we would have never made money in that market. So that is why I would say buy when you want to and then keep it with you for some time. This is the most debatable and frequent question everyone has. Is buying gold jewelry an investment? Especially considering that now there is a 3% GST on buying gold, jewelry, coins, etc. You have to buy, you have to pay 3% at the buy time of buying and 3% at the time of selling, which is required by law. Also, there are certain making charges to 3, 4, 5%, 10%. And when you are buying gold, there are certain additives to it, which is called khot in Hindi. You add some sort of metals to make it more ductile or better in strength. So all that reduces the overall value, but it is charged at the price of gold. So you might lose 8 to 10% or more of gold's value when you are buying it. So a lot of people advise it is not a good idea to buy gold as jewelry. But I would put a counter question. If you are buying, say, a mutual fund for 10 years, then you would be paying about 10%, 12% as the charges over time, every year 1% compounded. So you will have to pay that also to the mutual fund companies. So what about gold? Why not gold? If you buy a property, you pay registry charges on top of it, 5%, 6%, 8% based upon where you are. So on various investment classes, there is some sort of levy, one time or annual, charges, government says, duties, all of them are levied. So don't single out gold, depending upon your horizon and all. It is okay as long as you are aware of what you are doing. While most of us prefer to invest in gold, there are a lot of people who are interested in trading in gold as well. So there is a futures and options market for gold as well. I'm not recommending you do that. However, if you want to outsmart the market and make money out of gold trading, one thing definitely is that there are patterns in gold where you can relate them to the market conditions like recessions, boom times, when markets are running stable, when there is a bull run happening, there's a pandemic like situation, something is wrong. So if you see the gray bars in this graph, they all point to recessionary conditions, depressions. And that is where markets have kind of tapered down, but gold has gone up significantly. Here, it is not at all indicating that the next depression or next bull burst in the market, gold will go up. I'm not trying to say any of that. So use your own discretion. But there are patterns, you must understand those patterns if you want to trade in gold. What happens if you have inherited certain gold from your parents, grandparents, but you don't have invoices against it? So all gold possessions that you have should be declared in your income tax return against the asset details. If you don't do that, then the gold available with you will be deemed illegal. Under section 132, the maximum gold that one can possess without an invoice has limits. As per World Gold Council data, United States continue to hold the most gold in the world, followed by Germany. Though India is documented to hold just 745 tons of gold officially, but Indian households are estimated to be holding around 24,000 tons of gold, and another 4,000 tons is held inside the temples. In the post-World War II era, most central banks sold gold to raise money. But since the past 10 years or so, a lot of central banks have been again buying gold. Surplus countries like China and Singapore have been trying to use their surplus to buy gold. And even countries like Turkey, which have been trying hard to fight inflation, have used gold for that purpose. Approximately speaking, your risk appetite is 100 minus your age. So for someone who is 40 years old, the risk appetite is about 60%, which means 60% of your disposable income can go into slightly more aggressive instruments. Gold is a defensive instrument meant as contingency for tough times. Tough times can be said to last about 24 months max. So you need to keep aside funds in gold, which will suffice you for 24 months in case something bad happens like the pandemic. Thank you for watching this video. If you learned something new about gold investing, then do hit the like button. If you would like to know when the next video in this series is released, do subscribe to our channel and let us know in comment section what kind of videos would you want to watch in the future. Thank you again.